If you own your home and you've ever wondered, should I have a better mortgage? This video is for you. Most people think refinancing is just about getting a better rate. Sometimes it is, but most times it's about improving cash flow, consolidating debt, or unlocking equity. Stick with me for the next 5 minutes and I'll teach you exactly what a refinance is, why people do it, and when they should do it, and when you absolutely should not do it. Let's get into it. What actually is a mortgage refinance? You have the same house, the same title, but a brand new mortgage. Now this new mortgage is going to come with a new interest rate. You choose the term and you choose the amortization. The key thing to think about here is the amount of this new mortgage. Think about it like hitting the reset button on your current mortgage with the ability to increase that mortgage balance to 80% of your home's current market value. Now, if you don't currently have a mortgage, yes, you can still refinance into a new mortgage. If you do currently have a mortgage, that will need to be paid out as part of the new refinance, along with everything else on title. This includes solar panels, home equity lines of credit, anything that someone put a lien on title for, furnaces, hot water heaters, a renovation, anything on title will need to be paid out. Now, why would you want to refinance? Typically, there's three main reasons why people refinance. First is to just lower their monthly mortgage payment. You can do this by accessing lower rates, extending out the amortization of the mortgage, or taking advantage of some more advanced strategies to pay off your mortgage quicker. Some people even increase their monthly payments and lower the amortization to get that mortgage paid off as fast as possible. All of this is possible by refinancing your mortgage. Number two is my personal favorite, and that's to consolidate high interest debt. If you have credit cards at 20, 30% interest, home equity lines of credit at over 10% interest, even car loans at 8, 9, 10% interest, when you refinance your mortgage at market mortgage rates, you can use that equity that you pull out to pay off those debts. This will do three things for you. One, it's going to improve your credit score by significantly reducing the balances on those credit lines. Two, it's going to consolidate all your payments into one monthly payment, and it's going to be significantly lower and bear a lot less interest, saving you money. The biggest advantage of this that I see for people is it gives them a light at the end of the tunnel. With revolving lines of credit and credit cards, monthly interest keeps on stacking up while you're making that minimum monthly payment, and it's going to take 10 or 20 years to pay that balance off. A mortgage is a loan with a fixed amortization, meaning at the end of that amortization, the mortgage will be paid off. This makes managing your debt much easier. The third reason that people refinance is equally popular, and it's just to access equity that's locked into their house. If you're looking to renovate, invest, even purchase another property, you can unlock your cash in your house by refinancing your mortgage and put the funds towards that. Keep in mind, this transaction is tax-free. If you were to pull money out of your RRSPs to invest or purchase a second home, you're going to be hit with a large withholding tax. The equity in your home isn't doing anything, just sitting there. Put your money to work. One of the most popular questions I get is, what's the difference between a renewal and a refinance? A renewal is simply re-signing your mortgage for a new term. Nothing changes on your mortgage aside from the next term that you're signing and your interest rate. You're still going to be paying off that mortgage in the same amount of time as your original amortization. So if you have 10 years left at renewal, you'll have 10 years left after your renewal. You're just re-signing for a new term at a new interest rate. A refinance is an entirely new mortgage that you can restructure to fit your new goals. A simple way to think about it is if the structure's changing or money's being added to the mortgage, that's a refinance. So when does a refinance make sense? Well, if you're in any of the three situations that I just mentioned, you should probably look into it. Whether you're looking to unlock equity, lower payments, or crush debt, a refinance is often the least expensive and only tax-free way to do this. The goal isn't just a lower rate, it's a better full financial picture for your family. Conversely, when is a refinance a bad move? Well, it might not make sense to refinance if you're planning on selling that home soon. You don't want to lock into a 5-year mortgage, sell your home in 2 years, and eat a massive prepayment penalty when you sell that house. Speaking of prepayment penalties, if you've just renewed your mortgage specifically into a 5-year term, the payout penalty on that mortgage would likely outweigh any interest savings on a refinance, and we'd have to run the numbers to see if it makes sense. Third is if you're just refinancing to unlock money to spend. By spend, I mean on purchase lifestyle item. A mortgage refinance is a tool, and it should be used as such to improve your financial situation. Use your equity wisely. And if you're wondering if a refinance would help you, it's not a guess, it's a math problem that we can work through together. If you're in Alberta and you want to know if a refinance works for you, let's work through the numbers. If you want more information, links are below, and download my free app, the best mortgage calculator on the market.